Wasi, what is your strength? What is your strength?
So my strength is, it depends on the seasons. I usually am better at doing scalp trading, right?
Scalp
trading. So that's making money in literally minutes.
Yeah, day trading.
So it's day. So we have day trading and
losing
scalping.
money in minutes.
Yeah.
Gotta be real.
So I'll tell you this. So I'll tell you a story. So one of my biggest days, well, actually my biggest day, I made $100,000 in the market in a day. In a day, right? This was July 2020, right? So what ends up happening is we bought into Amazon at the time, right? I bought some Amazon contracts, some Tesla contracts, some Netflix contracts. I think Google as well.
Netflix was good.
But Netflix was really good in 2020. So so what ended up happening was I got into the trade, right? And pretty much like right around the time of like when the market opened, right? And then literally in minutes, the stock started just exploding, right? Like a 10% gain, 15% gain in the stock itself, and across like Amazon, Tesla, and Netflix, right? Now, I put in about $20,000 into the Amazon play, right? Now, what ended up happening was Amazon went from, I think, about 3,100. I think it gained about 100 points in a day to 3,200, right? And my contracts ended up going from 20K to, I think, almost about 100,000, right? On Amazon alone. Sorry, no, 80,000 on Amazon alone. The other plays that I had were giving me like 10, 20,000. And so that's how I ended up making 100,000 in a day. So that's my strength. I like momentum trading. What that means is essentially you're watching the market and looking for specific trends, right, in the market. So you might have a pre-market plan of saying, hey, what's the current news out there? What's the market sentiment on a specific stock? And, is it up or down, right? So, I would then decide to either buy calls or puts really close to open, and then I would end up selling literally minutes later, right? Gotcha. So then there's another one of my strategies, which is called earnings plays, right? This is one of my favorite ones. So there's an earnings report, right? Earnings play, yeah. So essentially, a company would announce their earnings report of their specific their revenue and their quota for that specific quarter, right? And so essentially, what ends up happening is, depending on the market sentiment of what the investors believe that company is supposed to do for that quarter, then the stock would either rise, 10% or fall 10%, right? So if you were to decide to buy a contract or many contracts of a specific company right before they announce their earnings, then your contracts actually go like 1,000% in a day. Like you would literally make a 1,000% gain in a day.
If you call it right.
If you call it right. If you call it right. However, with options trading, you can only lose the amount you put in. Mm-hmm. This is one of my favorite strategies because you can actually use, $200, $400, for instance. When Zoom first reported their earnings, right? This was back in 2020. When Zoom did theirs, they had contracts of $400, right? But obviously because of the pandemic and things like that, Zoom was like a really popping company at the time. Yeah. So all the investors loved Zoom at that point in time, right? So when Zoom came out and reported their earnings, like they beat it like by a wide margin.
The stock doubled that day.
So you can literally take $400 from that earnings report, right? And literally the next day have about $4,000, $5,000 from that $400 contract.
Yeah, we played it.
Yeah, we played it.
So
it went from 275 to 400. I got your mic a little closer too, Deji.
Oh yeah, we actually played it.
You could actually move the mic closer so you're
comfortable. There you go. We got it at $150. I bought mine at $150 per contract.
I got $275.
Yeah, Zoom.
Yeah.
And it went to
how many you get, Deji?
So
how many, yo?
So for earnings play, you have to be careful because you can't just go like all head in. Yeah. And because sometimes it can go your way, but you still lose. Because something is this, right? There's something called a market maker number. Yeah. Right? The market makers are expecting this
market
maker number.
Yeah. Market maker numbers.
Yeah. Okay. So they're expecting a particular stock to move as earnings at a particular price. So on Think or Swim or like some platforms, they write MMM, which is market maker move, they will say plus 10, plus or minus 10. So they're saying if this move plus or minus 10, the IV, which is the implied volatility, which is what multiplies your contracts,
right,
is gonna go crazy and you can make more money. Now, if you're wrong, or let's say you're right, the right direction, but it doesn't make that market maker number and you're out of the money, you might lose or you might not get the same gain.
Mm-hmm.
Yeah.
So you have to be right. That's one thing. And then you have to get the number that the market makers expect.
Yeah.
But then you're playing with little money.
Yeah.
So I bought 10 of those. That's like 1,500 and each went to like $4,000. So that was easy money for me. Right? But if I knew it was going to go, if I was so cocky, I would have put like 20K to that. That would have been easy money. But then it could go wrong or it could go my way and still not make the money.
Yeah.
So you have to be careful when you're playing earnings.
Yeah, earnings is you have to be very careful. There was one recently for Peloton.
Oh, yeah.
Now, Peloton was a company that investors really loved during the pandemic. However, what we ended up seeing was that the company itself ended up like cutting their prices of the bikes, like in half. For instance, I bought the Peloton bike back in July 2020 for about $2,000. That same bike is worth, I think, about $1,000, maybe even a little bit less than that. Yeah, because they needed to still make money. Nobody was buying Peloton bikes.
Everyone's going out. So.
Yeah,
everybody's going out now.
So what ended up happening was,
yeah.
And the gyms are opening back up.
I really like this conversation because it gets you thinking about the world,
real world
economy
problems. Yeah,
like when you for right now, I saw something happen with Peloton.
Yeah.
It was like a TV show or something like that.
Yeah. He had.
What happened?
Yeah. So there was a TV. Oh, you want to talk about? So there was a TV show that essentially had the Peloton bike in the show, and essentially I think somebody died. Somebody died on the show or something because
on the show.
Yeah, on the show.
On the bike, basically, on the bike.
Yeah.
So that's bad. People are emotional.
Yeah.
So what do you think the stock did? Hold on.
People are emotional. Trust me.
They're saying he died on the bike.
So the bike was the cause of the death. So people
why was the bike the cause of his death?
So it was a TV show.
I mean, it was just
people die.
He didn't actually die.
No, he didn't die. It was the TV show. Yeah.
No.
So in the script, he's on the bike and he dies on the bike. And that affected
the price of the stock. That's why I said the market is not rational.
Yeah.
The market is
but then you have to understand
can they sue the TV show?
No, I don't think so.
I'm not sure.
I mean, media protection is
I think they tried to spin it like they did. I think they created Peloton. I think they created an ad to try to spin the whole idea of like what ended up happening.
For a Peloton to be on a TV show, that means Peloton's getting some royalties of that.
Yeah.
So, and then something else is this. You have to understand that I don't think it happened because of that alone. I think someone was trying to unload and just found an excuse to unload, really. Sometimes what they tell you is going on is not what is going on.
Yeah.
Right?
Yeah.
So, for example...
Controllers, bro.
Let's talk about December 2019, right? Before the pandemic. That's 2019. The highest number of CEOs were quitting their jobs. Yeah. And everybody was like, what's going on? Why are the CEOs quitting? Not knowing that the pandemic was coming. Warren Buffett said, I'm going on cash. The CEOs are saying, we're leaving. That's because something is coming for the market. If the CEOs were still there, they're going to blame them. Why is the company performing bad? And guess what happened? 2 months later,
March.
COVID hit.
Yeah.
Stocks went to lows. Stocks were down like 80%.
And CEOs are starting to resign again. Jack Dorsey just resigned.
Exactly. And there's something that's happening right now. Yeah, they're selling.
Something's happening.
CEOs are selling their stock. Yeah.
We're
CEO of Microsoft, Satya Nadella, he started selling his shares. You have Elon Musk, obviously.
Tim Cook.
You have Tim Cook from Apple.
DC sold like 7.5.
Jack Dorsey. Jack Dorsey just left Twitter, I believe.
Yeah,
right?
He's focusing on SQ right now. The Omicron stuff is crazy.
Is the market down right now?
The whole December it's been dumping.
Down.
It's been dumping all of December.
It's been dumping for a month now.
We've been dumping for about a month.
I'm quitting. You buy it. You buy the put?
So you can buy it for different contracts, right? So for example, our technical analysis said, okay, the market is now in a downtrend. Okay, we reached all-time highs. Okay, we tried to test it, we reject it. So we say the market is a downtrend followed by news. Just get a contract a month out. You don't have to buy for next day and just hold. Literally just hold it. That's all you have to do. Just hold your contract. As the market goes down, your contract starts multiplying incrementally. It just starts going crazy.
How long after news hits? How long after news hits does it severely affect the stock?
Oh, sometimes immediately. I think
sometimes even before.
Even before the news. Sometimes even before the news hit, the market would drop.
Sometimes that's the result of like insider trading.
Omicron news. When Omicron,
can you get that door for me, bro?
When Omicron news hit, literally that day, the market just started dying. Like in real time, we were trading, and then we just started seeing the market die. So we're connected to all these news outlets. And then somebody posted in our group, "Hey, Omicron variant found in South Africa." You know what? Guess what we did? We hopped into puts. We wrote the momentum down right there and then.
I'm down.
The stocks are down, bro. Nobody who has a stock portfolio is smiling right now because a lot of big companies took huge hits in the month of December. But this is also an opportunity, though, to start scaling into long-term calls.
Exactly.
Yeah.